Morning, everybody. It is 8:25 a.m. It is September 7th. Welcome, welcome, welcome. Still trying to get adjusted to my daughter going to kindergarten, and she normally was not here at this time, so it's starting to get used to this schedule. Um, anyway, this market had some weakness yesterday with Apple obviously getting that. I talked about that pre-market yesterday, which my video, I don't know how to delete it, so if you didn't see it, but I talked about that news yesterday, and Apple's pretty much selling off even farther pre-market today. We have initial jobless claims today, and I talked about the foundation being weak in both markets. Those single prints, I name it the toothpick holding up an elephant, and exactly that came to fruition basically. And so that weak foundation was cleared out a lot yesterday. So there's still some left in the Nasdaq. So anyway, without further ado, welcome to my channel. My name is Steven Gonzalez. I use volume profile, market profile to find structure in the market, as well as supply and demand levels, gamma exposure levels, and the rolling most traded price of the week and the month. So that keeps us on the right side of the trade and try to flow with the market, right? Not always get enticed by price action. So that's very important not to do that. Okay? So subscribe if you haven't already, set an alert. That would mean a lot. If you like what you see, you could always give me a like. Hit that like button, that would help me out. As well as you can follow me on Twitter at Gonzo719. All right, let's get into the watch list here. Now, you can see here the VIX is up 4.22%. The dollar is up to 105. It's up 0.19. Bitcoin is basically flat. Gold, interesting, the dollar is strong and gold is up. 10-year yield is basically flat. The Dow is down slightly. 30-year bonds are being sold slightly, either down 0.25, Russell's down 0.33, ES down 0.45, crude is down 0.51, Nasdaq's the big down one is down 0.86, and silver is down 1%. That silver, that metal is very volatile. That is down. All right, so let's move on. And let's go to the leader here. There is none really. Boeing is flat. Okay. We'll go to the laggards, the big ones. Okay. We'll go to the one percenters. That would be Snow, down 1.07%. AMD down 1.5%. Nvidia is down 2.1%. Tesla is down 2.3%. Apple, with that iPhone ban news, is down another 2.93%, almost 3%. BABA, with China weakness, is down 2.98%. Okay. Now, let's go into top sector stocks. McDonald's is the leader right here. Okay. It's up 0.73. More reason why is because it got an upgrade. All right. Johnson & Johnson's up 0.17. All right, and let's go to the laggards. We got Salesforce, Roblox, and Qualcomm's down 1.9. Let's move on to sectors. Utilities, which is defensive obviously, is leading, but not by a lot. Followed by staples and healthcare, all defensive. And the laggards, discretionary, that's Tesla, Amazon, Home Depot. Semis, obviously AMD, Nvidia. And technology, which would be Apple, Microsoft, Nvidia. Okay. So as we're speaking, the market's making new lows right now. Right now. Okay. So when I hear some large orders hitting the tape, not sure if you can hear that, but that's some large orders hitting the tape. So something's happened. Oh, 8:30. Initial jobless claims just came out. So we can transition right into that market news because obviously something happened here. Let's see what we have going here. We have a lot of Fed speak today. Let's see. Initial jobless claims. We were expecting 234, right? Consensus was 234. The forecast was 239. We actually came in better than expected, which would be bearish. They want to see the employment market continue to weaken, and this is not weak, hence that is bearish. So that's what's been going on. Now you see a lot of Fed speak today. Fed Harker, Fed Williams, Fed Bostic, Fed Bowman. That's what we have today on tap for that. All right, so we can get into what's happened. So this is where Apple stock fell 2.6% following the Wall Street Journal report that stated China is expanding its ban on iPhones. Okay, GameStop rose 3%. The AI, the stock ticker AI, fell 10%. It's down 11.9% right now because it wouldn't give price forecasting. It doesn't know when they'll be profitable. And there's the McDonald's I talked about. Dell also got a downgrade, and that's down 2.8%. All right, that's what's been going on there. So you see all the Fed speak we have today. We already know about that. So we can move on to that. We can go right into the daily charts. All right, let's look at SPY together. And now look what they did yesterday, right? So see this big buying candle here, right? We came all the way down, not to the bottom of it, but down to the 20 simple day moving average, and then it got bought up and closed right at the 50-day moving average. Okay. Now, as far as we're looking at last month and last week, here's last month's, the white. So that's last monthly candle. We're inside last month. Okay. This is the weeklies, the orange. This is last week's low. This is last week's high. We're in the middle of last week. Okay. So, but very key, bounced off this 20-day simple average. Now, however, we know there's weakness now. We are at 433.72. 443.72. We're pretty much at the 20 simple moving average. Right here. We're at the lows of yesterday. So we closed all the way up here in the middle of the range, and now we're all the way at the lows. Okay? But now you have to look at something that's pretty key here. Okay, you've had 1, 2, 3 selling days. And here we go again. If we start the gap down, okay, there's a trend line here. This could be ripe for a little bit of a reversal today. You know, a little bit of a reversal. So, have to keep your eye on that. Okay, whenever you have, you can look at here, right? 3 selling days followed by, look, a swing low, and then you started to make a move back, right? So this is kind of a formula for a little bit of a reversal. Doesn't mean it has to happen, but you know, short, short, short. Eventually, people might take profit. All right, here's the Qs. Okay, what did the Qs do? Almost came down to the 50 moving average. Okay, almost came down to the 50 moving average. Hit the 9 EMA daily. All right, and closed at the middle of the range. Okay, so where are we at? Where are we at from the last month? Right, last month is lows, last month's highs. We're obviously in that, and then we have last week's highs, last week's lows. We're pretty much in the middle of that. Okay, we still have the 50-day moving average, the 20 simple day moving average. Okay. So that's what we have going in the Qs. Now where are we at in the Qs right now? 370, 90, about almost 371. So 370, 90. Let's see here. Boo. Right here. So you're gapping down in the Qs below the 50-day moving average. Okay. So the Qs are very weak right now. Very weak. So we have to see. There's some poor foundation we'll talk about that it can clean up further when we look at the market profile. All right, let's quickly look at the Dow. Dow's very weak, below all the moving averages. You can see here it actually broke last week's lows, but then it recovered, closed above them. Right, so we're in between last month's. We're still inside last month, and where's the that we're at now? 344.31. We're right here, right at the lows. Okay, so have to watch that. Uh, you can see there's a trend line here with the 100-day moving average at 341. Possibly could bounce there. But like I said, look at that. That's 4 days of selling. So this could be setting up for a swing low. Not sure. Okay, not sure. But you have to keep your eye on that. And let's look at the Russell. Russell now is below the 50, below the 20. Right, all those moving averages. You got a trend line here. This is last week's highs and lows. We're in the middle of last week's highs and lows. We're still in the middle of last month. Okay, we do have the 200-day moving average, the 100-day moving average right here. Where is the Russell right now? It's at 185.18. It is at the lows at the Russell. Okay, this is at the lows. So again, this could be set up for some type of reversal. Doesn't mean it has to happen. It's just taking note, right? Because sell, sell, sell. Seller is going to take profit a day, one day. It doesn't mean it's a reversal. It could just be like one day, take a break. That's what it could be. All right. Now we could look at that. Wraps up the daily charts. Now we can move on to the triple-headed monster. And that 10-year, this bond market is just not going away here. Okay, so the more these rates, the yields go higher, that is not good for the market. All right, there was a disconnect, but look, yields came down. Now they're getting, bonds are being sold again. So this is very important. This is very important. Okay, to keep an eye on that. And then the VIX, look at the VIX, rising all the way came all the way from down here. It's just rising up, right? So we're over 15 now. We're at 1536. So, can we reach 16? That was last week's highs. We have to see. And the dollar is making a move, which is very interesting. Look at that move in the dollar. Okay. You can zoom out. You can see here, this is last month's highs. Last week's highs. We're above both of them. So this definitely means the euro should be getting very weak in the yen, but the euro, the largest basket, there's the euro. You see what's happening with the euro? All the way down. The euro is literally selling off, which is going to be strengthening the dollar, okay? All right. That is the indexes, and that is 10-year yield. Let's get into my favorite. Let's get into the market profile. Yes, demand. Let's do that. Get my trusty marker. And let's look at this market and look at the structure. Okay. So now, like I said, this is kind of setting up for that reversal I was talking about, right? But let's just talk about what we normally talk about. Okay. Okay, we're gonna look at this double distribution here in the profile. So you got the most traded price of the week up here. Then you got big volume here, and then we're starting to taper, right? So what's going to happen most likely is this price in here is probably going to become the most traded price of the week. If this moves down, and you have the most traded price of the month here. So this is the area right here. That's the tipping point. Above this, the bulls have a chance. You stay below this and start building up volume, the market can move further back down. Okay. So let's look at, you know, where we're at. Okay. Let's look at it. Now, we have single prints. This is from this candle right here. Those are single prints, okay, that were cleaned. Here's more single prints down here that haven't been cleaned yet. Happens to line up with the demand zone down here, okay, just to show you where those single prints are coming from. All right, I have them marked here in that like white kind of box, rectangle box here. Doesn't matter that this is happening now in the overnight because those single prints happened in the real-time trading hours. So obviously it's not going to offer much support right now, which it hasn't. See how it just kind of ripped through them? So you're in a demand zone, you're gapping down, you're at the lows. Okay, you're in a demand zone though. All right, Apple's sold off now 3.47% pre-market. It sold off yesterday. Like I'm saying, it's kind of ripe for a little bit, a possible fade. Okay, so let's look at inventory. So we opened up here. Okay, that's the only long activity. This is all the short activity. So we're net short. Okay, and look at this. We're short from all the way up here. All shorts, right? Shorts. And we're at the lows, we're gapping down. Before I left on vacation, this was the same setup kind of. We were selling off, selling off, selling off, then we were gapping down. That's usually ripe for some type of reversal. Now, it doesn't, like I said, it's all probabilities. Doesn't mean it has to happen, right? So, but it is setting up. And this is our tipping point. Right here. That's the bull bear line. Okay? Right here. What price? Sorry about that. What price is that, right? So we're looking at, I'd say, 44.70. Okay, that's the price you want to look at in the futures. If the market can get above this and hold above that, that is not going to be good for the bears or sellers, and they're going to be put on their heels. Okay, but on the other hand, if it stays below here, we're probably going to go lower. Okay, so let's just get into this. Okay, let's get into the scenarios here. All right, so this is setting up for one of my favorite reversals. Because you got to think. I used to not think like this. Oh my God, it's selling off. I want to go short. I don't think like that really anymore. Like I used to be like, ooh, I can't wait to just want to be short now, right? Or be like, oh my God, the market's selling off. Like I should be short now. I'm not. Whatever. That's kind of when you start out how you think, right? So this is what I would like to see if you want to see this market get a little bit of a bounce. Now it doesn't mean it's a reversal. It just means it's a bounce. What I'd like to see, market come in, pull, go gap down, gap and go a little bit, maybe go down to the bottom of this demand, start getting some buyers in here, higher lows, and you definitely, okay, definitely going to at least make it up to here. If you start to put that, that's the real test. This is the real move here, right? That could just be the bull move right there, and that ends. But it is setting up nicely, okay? So that's something I'm looking at, okay? You do have another demand zone down here. This would be a little more on favor of the sellers, but you do have another one down here that you could also find your footing, okay? Now, conservative bull would be like, all right, I'm gonna wait. I want to see price go across this tipping point and hold, hold, hold. Then you got singles from yesterday. That's impulsive selling that you could rip through, and you can bring yourself right back up to here, the most traded price of the week. So that's in the cards, okay? Now, as far as a bearish scenario, right? Now we just reverse that, right? Well, you have to talk about it. Here's the gap. I didn't talk about this before, but the gap rules, if you watched me for a while, this is how you judge the strength of the sellers, okay? This is how you judge it, okay? Gap and goes the most bearish. We can definitely do that, okay? What's the next thing? Failure to fill the gap and roll over. So those are two scenarios, right? And then you can also fill the gap and then roll over. So those are the bearish ones, okay? Those are the bearish ones. Those are the most, bearish ones. Now, you could also, what could also happen is you can come up here, fill the gap, start going back into range, which would go into the fade trade that I was talking about before. If you start creeping into this range, well, you're going to put a lot of sellers on notice, and you're going to come up to here. That's the tipping point, right? This is the bear bull line, 44.70. However, if you start getting resistance and you can't get above that and you start coming back, well, guess what? That's the move too. That could make the market roll over, because now you're giving the market liquidity from longs, the longs who got long, right? And you're going to now make them pay. That's what I'm seeing right now. Okay, I hope that all makes sense to everybody. All right, let's go to the Qs. Now the Qs, you can see these are single prints. This big white box, right? I was hoping to see if they could come to fruition today, and they're from this candle right here. That's the single prints, okay? And you got more down here. Now the market right now, the Nasdaq has cleaned these singles, but it doesn't count because it's not real-time trading hours. But this is why there's not much support. There were singles in the past, okay? So big gap down in the Nasdaq. Big. Apple down 3.6%. Okay, Tesla's down 2.9, Nvidia's down 2.6. A lot of this is a pretty big sell-off in the Nasdaq. Okay, you finally broke the balance yesterday, and you moved lower. That's what happened yesterday. You broke that balance. Okay, and from balance becomes big moves. Okay, and that's what happened. Now we're gapping down big time. You got single prints here. Okay, probably from the jobless claims. Okay, because the jobless claims were not showing them unemployment, or like people filing for jobless claims. Well, jobless claims, put it that way. People wasn't it wasn't like a bad number. You want bad numbers for bullish. It was a good one, right? What does that mean? That equates to the Fed having to maybe go higher for longer, right? So let's look at this, okay? We got our profile here. We got our distribution up there, another distribution here, and then now we're getting thin in the profile, okay? Most traded price of the week is here. We are under that, okay? So where can this all go to, right? Now the most traded price of the month is around, let's see here. 150.20. It's all the way down here. That could be our destination if there's weakness. There's also this price, 150.120, is the most traded price of this year with the demand zone there. Okay. I think the likely, if we keep going, we're going to come down here and test this demand zone, most traded price of the year in this area. That will be most likely our destination. Okay. So let's look how this is setting up. It's 100% net short. That's the only long activity was right there. You've been 100% basically net long. So all the overnight activity's been short. Okay. We ran right into the futures 20-day simple moving average right here. Okay. Can that be supportive? I don't know. It's a big gap. These are tough to read. Here's the gap. That's the gap fill. All the way up here. Okay. So I'm trying to see nuanced stuff up here. And that you basically have this up here is the tipping point. Would be the overnight high right here and yesterday's most traded price. Right here is the tipping point in the 50-day simple moving average and the futures. That's the area that the bulls need to take up and hold in order to go higher. If they can't, the most traded price of the week needs to move down here. Okay? Because if it can't sustain, you're going to do one of these. You're going to come back. Okay? Let's get right into the bull scenario. Okay? Now we know we're gapping down. And I already explained before how to judge the strength of the gap by do we gap and go? Do we gap and fail to fill the gap but then go lower? Do we fill the gap and go lower? Or if we go back into a range, obviously that's not strong selling. All right, you do have the simple moving at 20 simple moving average here. However, now I'd have to look at this move. Right? So this is the first one for the bull. You come down into these single prints, into the most traded price of the year, and you have a demand here. So I don't know how deep we go, but let's say we start to bounce. This could give you a little relief rally here. And I'm not sure if this is a big move, so I'm not sure about this, but this possibly could happen because you got single prints in the overnight, and it can go all the way up to try to fill that gap. Okay, this is very weak, this Nasdaq, so I am not fully sure what goes on here, right? I'm just giving the bullish scenario. I'm not saying this has to happen. Okay, if this happens and we start to go into here, well, we probably balance out in this area. I don't think we just automatically go all the way up. I don't think that's in the cards. But you never know. Okay. So bearish scenario. It's all about you have a supply zone here in the gap fill. Okay. So I'm not a gap and go guy. I'm not going to come in and short and hope to get down here. That's not my style. So, but even a scenario that's not usually what happens. But obviously, first scenario can be a gap and go, and you can go right for this most traded price demand zone. Do you make it down to the most traded price of the month? Not sure, but it could be always in the cards. Okay. Of course, you can get a little pop and roll over, and you can fill the gap and roll over. Okay. So those are some of the scenarios that can happen. However, if then you have a supply zone here where you can come up into, and if this could roll over as well. So the sellers really have the upper hand right now. Okay, the sellers have the upper hand. Also, this is a lot of ground to cover. So that's why I'm saying a large gap is hard, really hard to read. Okay, you really got to be patient. Okay. However, if the market does come up to this area here, that's really where the rubber hits the road, and you can get lower highs, and then You could roll over, we could balance here, but this could be the move. I know that's a lot, because the big gap is just hard to read. You really need the market to settle down to see what it's really doing. Look at all the internals. That's how to determine that. Yeah, we can do Meta. You're lucky I got 5 minutes left, Chief. Um, but yeah, that's the scenarios here. Um, looks like Rosita wants me to look at Meta. We can do that. Let's pull that. Let's pull that up. Let's pull Meta up. All right. Let's look at this daily chart. Okay. So this is my Express to daily chart. All right. So, on the daily, you're just looking at it like this. You have an uptrend, right? Um, Yesterday, Meta closed at last month's highs, and it closed at last week's highs. Okay, and it closed there, right? So if you look at this, we're above all moving averages. Okay, this is bullish. This is a bullish chart. Okay, that's if you look at this. All right. Now, if we go to what's going on right now, oh, I'm not even on Meta. Jesus, my bad. Let's start over. This is Meta. Okay, so again, there's a downtrend here in Meta, right? But then we've made, consolidated basically here. So Meta yesterday, what did it do? It actually opened here right at last week's highs. Okay, and it's just in a web of crap here. It's not a great daily chart because you're in the web of the 50-day moving average, the 20-day simple moving average, and the 90-MA daily. So as far as moving averages, it's tough sledding because I would consider this like a spider web. And again, this is all probabilities. I don't have a bias in this chart. I know, Rosa wants me to look at this, but what I would think in this is just too sticky with all this web of moving averages, right? And then you have last week's lows and last week's highs, and it closed in the middle, upper portion of last week's candle. Okay, the monthly high and the monthly low, way in the middle of that, right? Now it broke a downtrend yesterday, even though it sold off. Now where is it at now? It's at 297. Okay, now the whole market's weak, right? But if you look at it really quickly, let's look at where's Meta. Meta is one of the stronger stocks, even though it's down 0.5 pre-market. You notice it's at the top of my list. I sort this by pre-market strength. So it's the top 3 of the stocks right now. So it's not really weak. It's not a weak stock pre-market. Okay. Now if we move over here to look at Meta and we look at the pre-market here, okay, you can see just in this chart alone, Meta has made a move up and it's consolidated. Okay, 295. I haven't done this gamma levels, but this is the flip point, 295. This is Meta's flip point for gamma. Below this is negative gamma, which means that if it loses 295, doesn't mean it falls down like an anchor, but it increases the volatility. Okay, and look at this support. So 295 is the area. That's why I have an alert there. Okay, now let's look at where it is in relation to yesterday. The blues are the daily, previous day's high and low. So we're not even at the lows of yesterday. Okay, that's yesterday's highs and lows. So there's really no edge in this meta right now. Okay, 295 is really what matters. 295.66 is yesterday's low. So this is not bearish. Okay, it's not bullish. It's just in the middle of the muddle. Okay, and like I said, you're in the web of those moving averages on the daily chart. Now let's go one more step really quickly, and we'll go over to look at the profile real quickly. And we'll just see. It's probably going to show you what I just said. All right, it is. Okay, so look, here's the largest volume. Just want to show you this. That's the largest volume right here. That was a selling candle. Now look what happened. It got bought up. Those sellers had the cover right here. Okay, this is the most traded price. I'm not even looking at Meta. Oh my God, how annoying is that? Okay, here's Meta. God, I'm off my game today, my daughter's schedule. But this same thing. This is what I just said. 295. You notice where 295 is? Right here. Most traded price of the month. Okay. Now, here is a largest candle. It was a selling candle right here. And look, that got ripped apart. Then they got more selling. That bought up. And now 295 is the most traded price of the month. Look at the profile. Total balance. You're in the middle of the most traded price of the month. Now, big move can come from this, but it's just not a place where you want to initiate a trade. You're just in the middle of the muddle. Like I said, look at the daily chart. All those moving averages. You see, you're just consolidating for 1, 2, 3, 4, 5 days in a row. A big move's going to happen. It's just not very weak. Okay? It's just not very weak. I mean, you want to see weak, you go to Apple, right? You want to see weak. Now this is Apple. Do you see the difference in that chart? That's weak. That is a total different chart in Apple, right? And I missed my short yesterday. I should have shorted Apple yesterday with that news and how that was setting up, but it doesn't matter. That's weak. This is a weak chart, okay? You go to the daily chart. Look at that candle. Does that look like Meta's chart? It doesn't, right? So, and where are we at now? 176. We're all the way down here right now. So, that's going to be it for me. Hope that shines some light on there. All right. Subscribe if you haven't already. Set an alert. All right. Please give me a like if you like what you saw. And you can always follow me on Twitter at Gonzo719. So stay patient. Okay. This is a tough read. Big gap down in the Nasdaq. Okay. Small gap down in the ES. So very tough. Very, very tough. Apple's selling off. Right. So hopefully that made sense to you, Rosita, what I talked about in Meta. If anything, I would say probably Apple was the short for yesterday. But that's about it. All right, guys. Have a good day, and I will see you guys tomorrow.